Right now, if you see, even in the social media or any news channel or any news articles, one of the hot topic is the geopolitical tension between Iran and Israel. Tension between Iran and Israel, and also US when it has declared their inflation data, which is on a higher side. These two things definitely will have an impact on the overall stock market, because stock market is the place where, apart from the domestic situations, international situations also is important, right? So internationally, how the global markets react, so our Indian markets also will find a clue about it. Why? Because the Indian stock market is not only about the business what it does domestically. We have some export business, export oriented companies. So if the other market is impacting, yes, we also get an impact. So what are the actionables we have to do? Today we will be studying about that, right? And just to summarize, or just to give you a bird's eye, what I would suggest you is, right now, this is not a panic situation where you exit your entire portfolio. No. Second, the long term stocks which you are holding, you should not touch them, right? So there are no early signs of a bearish market, right? Short term, just follow your system, follow your exit, follow your stop loss. Fourth, any new position which you are taking, when you are taking an entry price, be ready with your exit also. Yes, this is my exit, maybe a 6% or 8% from the purchase price. If it is declining, yes, I will be exiting there. Follow a strict stop loss for any new positions. And the fifth, most important, this is the perfect time to identify strong companies. Why? Earlier, in the last 1 year itself, we have seen Russia Ukraine geopolitical situation, right? And we have seen US also has declared earlier higher inflation in the last 1.5 year, right? We have Hamas, right? We had Hamas geopolitical situation. So all of these geopolitical situation has taught us, even there is a small correction in the market, those companies which are exhibiting strength, after this disturbance is over, they have literally moved up. So a wise investor, right, or an intelligent investor, during this situation, during this scenario, a geopolitical situation is happening, you should take advantage of it. And when there is a small correction coming, identify those businesses which can spike up. You have to keep a keen eye on observing those companies and preparing a watch list. And once the market again start its upward journey, we have to be there, because these are the first companies which will scale up, right? So now, to understand this, let's discuss systematically on a point by point what are the actionables we have to do during a volatile market. Okay, so without any further ado, let me share my screen and let's see what are all the actionables during a market volatility, right? During a market volatility. So what we will do, we will be dividing this into five concepts. One, how we need to identify some strong entities during this volatility we'll be studying. Second, what kind of a formation we need to observe. Third, what is the kind of a role of volume either on the buying or selling side. Fourth, relatively stronger companies. When you say, sir, in a volatile market, what kind of companies I need to pick, we will use an indicator called as relative strength to identify those stronger companies. And lastly, for our exits or even weakness, how can we identify that the market is becoming weaker? We will use an indicator called as EMA, exponential moving average. So, going to the first topic, more than 96% of the super performance stocks emerge from bear markets and general market conditions, right? So whenever there is a small volatility or correction in the market, during this correction, those companies which are exhibiting strength are the companies where 96% of the times they super perform. For example, let me give you a scenario where, let's say, this is Nifty's reaction, right? Overall Nifty. And this is stock 1 and this is stock 2. So let's say during a bear market or during a general market correction, when the Nifty is declining like this, right? When the Nifty is declining, and when the stock which you are observing, right? When the stock which you are observing, so that company is also falling with respect to Nifty 50. That is what generally happens. Whereas the company which you are analyzing, which is the stock 2, either it is flat, right? Yes. Even though the market is weak, this company is flat or is just consolidating, right? Or even let me take another example, stock 3, right? Stock 3. So this company, even though the market, overall market is declining, this company is picking up strength and it is moving high, right? It is moving high. So during a general market correction or during a bear market, those companies which are either forming a base or just consolidating, not declining, not increasing, they're just forming a base, or those companies which are picking up strength, which are increasing, these are the companies which you should keep in your radar. Do not average down. Sir, yes, this company is a good company, but as it is declining, I'll be averaging down more, right? Yeah, do not average down. Or, in a simple words, do not try to catch a falling knife. You don't know how long it will go down, right? How long it will go down. Yes. So any stock, if it is exhibiting strength, in our case, stock 2, right? That is the stock we should consider. The stock is not falling or it is in a sideways zone, even though the broader market is bearish, we have to keep in our radar. Third, those companies where the quarterly results are also stronger. Yes, right now, if you see January 24, February 24, and March 24, these 3 quarters results will be coming this week. Even TCS has also declared results, which is on par, right? Which is not too bad or even it's not too good. It is on par and okay, right? Similarly, we get many companies results, right? So the Q4 results of those companies which are good, which are decent numbers, and even they are picking up more strength, or they are either sideways or consolidating. Those are the companies which we have to keep in our radar. So in the example which I have shown you, stock 2, which is forming a base, which is consolidating, stock 3, which is even increasing its strength, those are the companies we have to keep in our radar, right? Second, apart from the strength, what you are observing, it is very important we should look at those setups where you find a higher high and a higher low formation, which means, let's say, sir, I've identified a company where the Q4 results are good. So, March 2024, you find it in your screener itself, right? In your screener, you find it. March 2024, let's say they have declared 100 crores earnings, right? I'm just giving you a hypothetical number. March 2024, 100 crores is the revenue they have done, right? March 2023, they have done 80 crores as the revenue, right? Yes. Year on year, YOY, there is a good growth, right? There is a good growth. So these companies which have done good on quarterly results, right? And they are picking up strength in terms of price and volume. So let's say this is the kind of a structure they're exhibiting, right? This is the kind of a structure they're exhibiting. So what is the structure? This is a high, this is higher high, and this is another high, this is higher high, right? So any structure which is a higher high, or this is your low, and this is another low which is a higher low, this is another low which is higher low, right? This is higher low. So this kind of a setup, a higher high and a higher low formation is what we are looking at. And whenever the stock is increasing, we need more volumes, which means when the stock is doing more, which is positive on the day, when there is more volume that is coming, volume is nothing but more number of buyers who are coming, right? And lower volume on down days. Yes, when the stock is declining, we need lower volumes, which means less number of sellers. So let's say a stock is increasing like this, and we have some good volume below, right? Whenever there is a green bars below, these are buyers. And let's say on a specific day it has declined, and the sellers are represented by red bars, right? Again, on the next day, we saw a positive day. We saw some good volumes coming up, and subsequently, again, it has declined because of some reason, and the volumes are like this. So, what is this setup? We have observed more volumes on up days. Yes, this is an up day because it is a positive day, right? It has increased. So, the volumes are more. Yes, more number of buyers are coming up here. And down days, these red bars represent down days, and below volume you see lower volumes here, which means the sellers are less, right? Sellers are less. So this is the setup we wanted, right? This is the setup we wanted. Third, role of volume, right? Role of volume. Sir, what is the importance of getting more volume during up days? Because when the stock is increasing and more number of buyers are coming, that means more institutions are entering, right? More institutions are entering. So if there are DIIs or FIIs who are focusing on those companies, as I always say, in order to travel a longer distance, you have to sit on the shoulders of a giant, right? When DIIs, FIIs are increasing, you get it in the volume. There will be a huge volume spikes. So volume plays a very, very important role, right? And next, let's study about two of the important indicators, which is relative strength, right? Which is relative strength. So any stock which is performing better than the index, those are the companies which we have to keep in our radar. And when you look at relative strength on a daily time frame, your period should be 123 days. Weekly, it should be 52 weeks. And monthly, it should be 12 months, right? Monthly, it should be 12 months. So what we will do, let me open up TradingView and let's load a relative strength indicator on a couple of stock examples, right? On a couple of stock examples. So let's say I wanted to analyze CDSL, right? I wanted to analyze CDSL as a stock. So I check whether the performance of CDSL is relatively stronger than the overall index or not, right? So I'll go to indicators, I'll go to technicals, and I will load relative strength here, right? Relative strength by modulus, and by default it will be S&P. So I'll be changing it to Nifty 50, which is our benchmark. And as I'm looking on a daily time frame, I'll be keeping the period as 123 days, right? 123 days. And if you see this dotted line is your benchmark. And this thick blue line is the relative strength of CDSL. If you wanted to make the dotted line more thick, go to style, level, and increase the thickness here, right? Increase the thickness. So yes, relatively, CDSL stock is more stronger than the Nifty 50, right? In daily time frame. Sir, I am looking at the stock for a long term, maybe 1 year and above, 3 years and above. You go to a weekly time frame and you change the setting to 52 weeks, right? So the last 52 weeks, you are checking at the strength, right? So yes, with respect to Nifty 50, it is relatively stronger than your benchmark, right? Than your benchmark. So either on a weekly or on a daily, this is relatively stronger. At any company which you are analyzing, you can check with respect to relative strength regarding its strength wise. And lastly, the most important factor what you wanted to look at is, sir, I'm already in a stock, right? I'm already in a stock. I'm already at a good profit of 15%, 20, 30, 40 percentage, right? I'm already at a good profit. Now, the overall general market is correcting. So what should I do? Should I liquidate? Should I do profit booking? Or should I stay? So whatever we have discussed till now, check whether the company is exhibiting that characteristics or not. Let's say, sir, I'm already there in X Private Limited. With respect to the general market fall, is the stock also declining similarly, or is it flat, or is it even picking up strength? So you need not take any action. Be there. It's a huge decline. The stock is also slightly reducing, but the volumes are not higher, right? The red bars, the sellers are very small. So when there is low number of sellers, that's a good indication. And lastly, you can apply EMA indicator, right? Which is exponential moving average, right? Exponential moving average. So first of all, yes, when you look on a daily time frame, sir, this investment, I'm doing it for short term, right? Maybe couple of days, couple of weeks. So you look on a daily time frame, and exponential moving average 21 signifies the reversal of trend, right? When there is weakness in a stock, right, then it will be trading below EMA 21, right? EMA 21. Yes. On a daily time frame, if the stock is trading below EMA 21, then it is a reversal in trend, right? Reversal in trend. And EMA 200 is like a Lakshman Rekha. Any stock, if it is below EMA 200, we should not be entering, right? Because it's a weak zone, right? It's a weak zone. Similarly, in a weekly time frame, sir, for example, I have companies like Varun Beverages, Titan Limited, Trent, right? So some of the long-term companies, maybe like a Hindustan Aeronautics, Cochin Shipyard, some of the long-term companies I'm holding. So how should be my exits there? So instead of EMA 21, you will be using EMA 30 on a weekly scale for your long-term stocks, right? For your long-term stocks. And whatever we are studying here is not only with respect to stocks, it is applicable on your index as well. So let's say I'll be going to trading view now, right? I'll be going to trading view. And what I will do, I'll just look at Nifty levels, right? I'll just look at Nifty 50. Yes. So right now, Nifty has been stronger from the starting of April onwards, right? Even from 20th of March, from the last week of March, Nifty has been very strong. And the last trading session on Friday, we got a decline of 1% decline, right? But overall, in the last 2 weeks or even 3 weeks, I would say market is very strong. So when will I get to know when Nifty is picking up weakness? We will apply EMA, right? We will apply EMA. So let me load exponential moving average. I'll go to indicators, I'll go to technicals, and I'll just type moving average exponential, right? EMA. So this is your EMA, either exponential moving average or moving average exponential. And here I'll be changing the setting to 21, which means on a daily time frame, the last 21 days, it will be checking the strength. So this is the average EMA line, right? This is the average EMA 21 line. So right now, Nifty is at 22,519 levels. So whenever Nifty moves below your 22,370 or 22,350, it will be declining below EMA 21, right? So whenever the overall index or any stock which you are there is falling below EMA 21, that is a reflection of weakness, right? That is a reflection of weakness. So that's not a sign for you to exit completely, right? That's not a sign for you to exit completely. Maybe you do a partial profit booking. Maybe you reduce 25%. And if it further declines or if it further falls below your support levels, then maybe you remove further another 25 or another 50 percentage, right? So you can partially do the profit booking, right? You can partially do the profit booking, and even you can follow EMA 50. So what is this 21, 50, 100 or EMA 200? This is the average price strength of those many days. If you are looking on a daily time frame, EMA 21 means the last 21 days average prices of all the 21 days. There will be an average line which will be drawn. That's this EMA 21. If you're looking at a EMA 200, the last 200 days price strength, the closing prices of the stock, the average line will be drawn, right? So this is how you signify. Let's say, sir, I am looking at certain companies, maybe like a Godrej Properties, right, which is right now also looking very strong, right? Looking very strong. Sir, I'm already there in Godrej Properties, where the price and volume action has been tremendously strong last week, right? Last week. So if you're already there, and if you wanted to know whether it is exhibiting strength or weakness, right? So if it moves above 2700 or 2720, yes, again it is picking up strength. And when there is a reversal, right? Let's say on the next trading day, or even today or tomorrow, you see some red bars. Sir, I'm already made like a 30-40% returns here. Just by 2%, 3% decline, you need not worry. Until and unless it is declining below your EMA 21, that is a reflection of reversal in trend. Until then, you need not worry about it, right? You need not worry about it. For example, CAMS, you look at it, right? CAMS, CDSL, CAMS are also doing good, right? Even if you see CAMS is at a very good breakout level. So once it is able to break out your 3,150 levels or even 3,200 and above, it can pick up more strength. But if it is declining below 3,000 levels, then again, it exhibits some weakness, right? Exhibits some weakness. Even you look on a shorter time period, your IRCTC, your Bank of Maharashtra, right? IRCTC last week has been strong, right? Last week has been strong, and it is at a very good breakout level. Let's see if it is able to successfully break out. If it is breaking down below EMA 21, that is again a sign of weakness, right? The same applies on a weekly. Sir, I'm looking on a weekly time frame. So you change your EMA to 30. You will be looking at last 30 weeks EMA strength, right? EMA strength. Sir, I'm already there in Aarti Industries, right? Aarti Industries Limited, which is technically strong. Maybe if it is declining below your 620 or 650 levels, that is a sign of weakness, right? So just to summarize what we have discussed in our today's session, right? First of all, a general geopolitical situation, right? A general geopolitical situation, be it like your Iran-Israel conflict, or even US declaring a higher inflation numbers, which are not too good. When we see a overall market correction globally, India may also face the heat. So couple of things which you need to remember. First of all, it's not a panic situation. Second, long-term stocks you need not touch. Short-term, follow your strict stop loss. Whenever it is showing weakness, any stock which is moving below EMA 21, maybe you can slightly reduce the position. Need not exit completely, you can reduce, follow a strict stop loss. And any new entries you are taking, sir, yes, certain companies, yes, CAMS, CDSL, it is showing more strength even in a weak market. I wanted to enter. Follow a strict stop loss. From the purchase price, a 6 or a 8% is your strict stop loss. And most importantly, this is the perfect time where you get a lot of winners in your portfolio. So analyze those stocks where it is exhibiting strength in a general market weakness, or those companies earnings wise they are doing good, and even in a market fall they are moving flat, or even they are picking up strength. These are the companies when the general market moves or picks up momentum, these will be moving very fast. I hope everyone loved this discussion. So let me know your key learning below. Thank you.